Welcome to the How Did They Do It Real Estate Podcast. Have you ever wondered how people succeed in real estate and what steps they took to get there? If so, this podcast is for you. Your hosts, Sayla and Eileen Prack, interview top experts in the real estate community to share with you their real estate journey and how they achieved massive success. Our goal is to provide you with valuable real estate resources and to help you apply it to your own real estate goal. Welcome, everyone, to today's episode of the How Did They Do It Real Estate Podcast. I'm your host, Eileen Prack. And today our guest is Darren Voros, and we're going to have a really great conversation with him today. He has a fantastic story about how he's been able to convert an old Victorian house into an 8-unit boutique apartment building. And if we have some time, we'll get into another story that he was able to build up a 31 micro suite apartment. And so, Darren, welcome to the show. How are you doing today?
I'm doing great. Thanks for having me on. I appreciate it.
So Darren, give us a little bit more of an insight into your background and how you got started with real estate.
I started had a previous career. I was 15 years professionally in musical theater, and I was over in Japan working at Universal Studios in 2001. I'm dating myself now, but that's okay. It was a really cool year for me. You know, they took such good care of us over there. They gave us an apartment and train passes and bicycles and gym memberships, and we got a per diem and we got a salary. And so I never touched my salary the whole year. I was able to live off my per diem, and we got paid in US dollars, and me being a Canadian, exchange rate was pretty good at the time. So I came back and I didn't really know what to do with that money. And so I thought, I'm going to invest in real estate. I bought a property when the market was doing okay, where I bought at the time. And then 4 years later, it had sort of boomed, and I almost doubled my money in those 4 years. And I was continuing to do theater because that's what I did. Real estate was just a bit of a side hustle for me. And when I sold that property 4 years later, I ended up being able to go out and buy 3 properties. And that's when I saw that exponential growth in my real estate portfolio. And I started to get excited about real estate and thought maybe this is an alternative path for me. And I kept working in theater for many years after that. And then at some point it just switched, started getting a little bit more active in pursuing real estate. I was more focused on cash flowing assets. First couple purchases, I think, were more like along the lines of they were going to personally benefit me. I was going to live in them, or I was going to rent them out as sort of in these nicer areas where I was doing theater. And then at some point I just transitioned. I stepped away from theater. The timing was right. And I went full time into real estate investing. And I've been doing it now for about a decade. And I love it. I absolutely love the industry. And I'm really passionate about continuing to build the portfolio.
So can I assume that you are fluent in Japanese?
I mean, by the time I left, I spent a year over there, and my level of Japanese was very good. It's been 20 years since that time, and I have not been back since. It was something where when you hear it every day and you're required to speak it a little bit, my level was decent at the time, I would say at best, but definitely I've lost a lot of that over the years.
Can I put you on the spot and see if you can introduce yourself in Japanese?
Yeah, absolutely. Watashi wa Darren desu. Canada kai ikimashita. I think something like that. It's like, it's Darren and I'm from Canada. I think that's all I remember.
It's such a pretty language, though.
Yeah, it is actually, it's relatively easy, because it's the same, like we have the same phonetics. So when you see something written in English in Japanese, like it's the same kas and mas and tas and things like that. So it's actually not that difficult to read, but obviously I couldn't read the characters. So I always had to see the English next to it for sure.
Oh, that's very exciting. It's super fun that you were able to experience the different culture and then take that back to North America here.
It was such a cool year. I had been there the 3 previous years with other shows, but I didn't stay for that long, maybe a month at a time, 2 months at a time. But that year was really transformational, and it was so fun and such a big cultural experience for me at that young age. And just coming back, it opened up my eyes to a lot of different things in the world and just how people live. And it was an experience that I'll cherish for the rest of my life for sure.
So let's jump into that 8-unit boutique hotel or the boutique apartment building that you converted. How did you find the property itself? And when you saw it, what was the vision?
Yeah, property came to me at the time through a realtor contact. I was actually an interesting story. I was in Costa Rica at a yoga retreat, and I was talking with this woman in the pool, and she was like, "Oh, my husband's a realtor in Toronto. You should connect with him." And I had his name on a piece of paper for like probably 2 years in my backpack, and I pulled it out one day and I thought I should contact this guy, and I did. And he's like, hey, I've got a property in your neighborhood. You might want to take a look at it. It's an exclusive opportunity. It's not on the market. So I went by and looked at it, and it's a big, beautiful home in a really nice neighborhood in Toronto. And my initial thought when he sort of put the purchase price out there was, it's just not going to work. It's too much money for me. I'd never purchased anything that large before. But when I started to look at some of the defining features of the property, the lot size was really enticing. It was a big lot, like I say, in a very established neighborhood. And I started to dive into the zoning a little bit and realize that there's a bit of an opportunity with a large lot that you can get a decent sized property on there without having to go through a lot of the administrative approvals that are necessary on a smaller lot. So I thought, well, maybe there's an opportunity here for us to convert this over. And with the height limitations in that area, I was allowed to go 3 stories. And Canada, we definitely utilize our basement spaces a lot because it's extra square footage. So I thought, well, it's a nice wide property. We can extend it off the back. And if we can go in and we can create 2 units in each floor, that gives us 4 floors, including the basement. That's an 8-unit apartment building, basically. And the zoning allowed for it. And we got tons of room for parking and everything like that. So that was kind of the initial vision. And then it's like, okay, well, now we have to go out and potentially raise the capital to do it and just figure out what that construction plan and what the budget is and all that stuff. But my initial reaction to it was it's not going to work. And as I dove into it a little bit more, I was realizing that this actually might be an opportunity. And it was kind of the precipice for a little bit bigger thinking. I think that a lot of people in our market here, there's a lot of competition in and around that $1 million price point. And when you get beyond that, it's an interesting thing that happens. You get this property was 2.75 million. Well, there's not a lot of people that are looking to shop in that $2.75 million, but you're competing with everyone in the market at around $1 million. So when you got into that different price point, you had the ability to put conditions on your offer and take a little bit of time. And that was really important for us to be able to make sure that this property was actually going to work with what we wanted to do. So I learned in that moment, by stepping up to the next price point, you have less competition. You might have a better opportunity to find an asset that actually works for you versus trying to swim around with everybody else to try and the inner properties that everyone's looking for.
Did the age of the property ever concern you?
Everything here, is kind of built in that same era, around the early 1900s or late 1800s. So they were built well. Brick structures themselves are still in very good condition if the property's been maintained. And we kind of understand now that everything on the interior is going to go away. Like literally all we keep is the shell and everything else is redone. The floor assemblies are all new. So other than, like I say, the brick shell, the entire structure is pretty much all redone. The foundation is the only thing you have to take a pretty good look at. And the foundation wasn't in really good shape, but we did what's called underpinning, where we actually dropped the level of the floor in the basement. So we were able to get 9-foot ceilings down there. So that just makes it a much more usable space. But yeah, that's really what we were looking at. And the property was, like I say, it was in good shape in terms of the exterior and the foundation, and everything else is going to be brand new. So it didn't really matter.
Were there also regulations that you had to adhere to because it was a Victorian property, or was it treated just as a normal resident or normal property?
Yeah, we didn't fall into any heritage, which was good. Sometimes that can be an issue, especially I think in these Toronto neighborhoods that have a lot of storefront areas. They want the storefronts to maintain that appeal of what they were 100 years ago. But in this situation, we didn't have any heritage things that we needed to deal with. But at the same time, I don't like to go into neighborhoods and take down these beautiful brick structures that really suit the neighborhood and put up these very modern buildings. I think if you can find a way to keep some of that appeal that's existing properties and then just create a new environment inside of that, and especially extend it off the back where not a lot of people are actually going to see it, I think that's a win. So what we ended up doing here, we pretty much kept the entire facade. We changed the front a little bit, but other than that, it looks like the house that was built in the early 1900s.
So you purchased it for 2.75?
Mm-hmm.
How much went into the rehab of it?
We have spent about $1.5 million on the renovation. Now, a good portion of that is development charges. So here in Toronto, development charges are high. They treat us like they treat any other developer, whether we're doing an 8-unit building or whether we're doing a 208-unit building, the development charges are the same. which I don't necessarily think is fair because I think there's a lot of this missing middle, we call it. There's just not a lot of these walk-up apartment buildings. Cities in dire need of them, but they're just not incentivizing developers to build them because there was on this property, there was $500,000 city charges with development charges, park levies, education charges, and that's before we even put a shovel in the ground. So it's really change is coming because after doing a couple of these, we have 4. We've got 2 that are complete and 2 that we're in construction on right now. I don't know that we're going to do any more because it's just they're prohibitive when it comes to that, the development charges and the city fees.
Got it. So after all said and done, after you split into 8 units, what was the unit mix?
So they're all very similar on this building. They're pretty much all 2-bedroom, 2-bathroom, with the exception of the basement units, which are 2-bedroom, 1-bathroom, just because they're a little bit smaller. But yeah, really nice, very open concept layouts and nice size rooms. Sometimes with these builds, you get a little bit smaller bedrooms for sure. I'm seeing a lot of like condos now that are calling them junior 1-bedrooms, 300 square feet. That's
a cute way to call it, a junior bedroom.
Yeah, exactly. Junior bedroom. You need to be junior to fit in them for sure. But yeah, no, ours are like 800 square feet. That's a pretty common 2-bedroom layout here for sure.
Oh, awesome. And so then afterwards, all said and done, and then were you able to lease these units I guess, first of all, how long did the construction of it take?
Well, we had the pleasure of renovating during the pandemic, which was that was sarcasm. So we had a lot of struggles for sure with building material costs went obviously through the roof, labor shortages. We were shut down for a little while because everybody was locked at home. Toronto was one of the most locked down cities. I think it was the most locked down city in North America for a long time. I mean, there was nothing happening here. Nothing was open. Construction, luckily, was not included in that. So people were able to go, but you couldn't have more than 1 person or 2 people on site at a time because everybody had to be social distanced and everything. So we were hoping to get the projects done in 12 months and it took about 18. So we were about a third more time than hoped. And I think our budget was about the same. We ended up being about 30% over our original budget. So, but the good news is the real estate values here were climbing as well. The same with the building materials. So the real estate values were going a little bit crazy here. And we had renderings done prior to the building being complete. And we have been able to pre-lease everything, which was nice. So when the buildings are done, they're pretty much fully leased up and ready to go. There's another nice thing too, and that's that we started with residential financing because these properties were essentially a single family dwelling. Mm-hmm. And so the bank was able to finance them at very low residential rates. And then when we complete the renovation and we now convert the building, now we're into commercial financing. So it's a little bit different and a little bit better. And we have a new program here in Canada that's phenomenal. And it's called the MLI Select program. And it allows, if you're going to be in affordable housing, or if you have accessible units, or your building is energy efficient, you can get 95% loan to value. And you can amortize that loan over 50 years. So it's really a game changer for those of us developing here if we can hit one of those 3 criteria to get into this new program. And we've been able to do that on all of our builds.
Oh, wow. I'm curious to ask also, what's kind of like the interest rate up in Toronto at this time?
Yeah, so we just got a couple of our buildings refinanced or financed on the takeout, this commercial loan, and we're somewhere in that 3.5% range. And like I say, that's with an insurance product. So the bank feels more comfortable that actually the Canadian government insures the loan. And so the lenders are able to give us better terms, longer amortization, and a higher loan to value. So that's what we were able to get, 3.5%. It's on a 5-year term and basically amortized over 50 years. We couldn't get up to 95% loan to value because our debt coverage didn't work, but I think we ended up getting 80 or 85, something like that. So yeah, it was decent.
So after putting all these renovations, splitting it into 8 units now and converting it into a commercial property now, what kind of value can we expect from this property?
Yeah, so we ended up creating just over $1 million of equity in the property. So like I say, we bought it for 2.75. By the time we had closing costs and everything else in there, we're probably around $3 million. We have double land transfer tax here in Toronto, which also sucks. After I'm talking about all this to you stuff, I'm like, why am I investing in Toronto? It's probably a bad thing. But like your area, we talked about this a little bit before the interview. It's like equity appreciation here is just off the charts, right? Because everybody wants to live in Toronto, and the equity just usually outperforms everything else. But yeah, so we were in for about $4.5 million, I would say, with carrying costs and everything. And our property's worth about $5.5 million.
Oh, nice. And this was over 18 months.
Yeah.
That's pretty cool.
Yeah, it's not bad. So our investors, they're keeping their money in. There's really no ability to exit their capital at that point, but all of them came in with the kind of like the 5-year plan in place to say, like, let's look at this in 5 years and we'll reassess and decide if we want to refinance it again or sell it, or, look at our options at that point.
When you were doing the zoning and the reconstruction of the entire property, what was the biggest area where you underestimated the cost the most?
Well, probably lumber was the biggest thing we underestimated. We were budgeting probably $30,000 to $40,000 in lumber, and that was typical at the time. And then I think lumber went to $10 for a 2x4, where it was $3 before. So I think our lumber was quadruple what we expected. And of course, there was labor shortages. Everybody was renovating at the time. So subcontractors were also, so that was definitely challenging for sure, was probably those subcontractors and lumber. Everything else came in relatively in line with where we expected it to come in, with, like I say, the exception of potentially the development charges too, which we knew were going to be high. They were just higher than what we expected because the city of Toronto raised the rates halfway through our development. So.
Oh, wow. They're able to do that halfway through?
Yeah, if you're if you're in design and you haven't got your building permit issued yet, so development charges are issued on the building permit. So if there's a change in the development charge fees in that interim time, which there was for us, they'll give you the higher rate for sure.
Oh, got it.
Yeah.
And so during this entire time as you're developing it up, what was like the biggest takeaway from this project?
You know what? I think one of the biggest things is I hired a construction manager who is, I've worked with him in the past, but he's not a general contractor. It's not his strength. He's a licensed plumber, so he's very familiar with the trades. He's very connected in the trades. But I think that was the biggest takeaway. I think I would have hired a custom builder. And I think the first takeaway would be I would have loved to just take the property down and start from scratch. It honestly would have been a little bit easier. But like I said earlier, I don't like to do that. And I like to keep the kind of the neighborhood feel of these properties. But I think hiring a general contractor who's got a crew of people that are, working for them specifically would have saved us a little bit of time. I don't know that we would have saved any money. We definitely probably saved money by kind of subcontracting it out ourselves. But I think the timelines would have been tightened up a little bit. And that as you know, when you're carrying these properties that are worth this much money and there's no revenue coming in, if you're delayed by 3, 4, 5 months, I mean, that's a huge cost to the project. So that was definitely a big learning for me.
So in situations like this, where the project ends up costing more money than what you expected, how did you overcome that?
Yeah, that's a great question. I think that for me, especially, it's important to communicate with the investors all the way along the way. And, I had a scenario for this property that was, if everything went really well, that we would be able to return about half the investor capital after construction was complete. And as soon as we got into the pandemic, and as soon as I saw the costs starting to escalate, the communication right away was that, there's not going to be a return of capital. That's just not going to be feasible at this time. But everyone committed to that 5-year plan. And so I think just going back to that and saying this was our original intention, we hoped that we'd be in a better situation, but this is why we have contingency. And this is why we have contingency on contingency, is because these situations can happen. Real estate is fluid. It's not something where you go in and it's like, here's the price today and here's the price 6 months from now or 18 months from now. It's really hard to predict. And then of course, we've been seeing escalating interest rates and everything like that. So this is how people get in trouble though, for sure. Like if you're going in and you're expecting that everything is going to be the way that it is today in 2 years, it can change very, very quickly. So I think the other thing too that my investors specifically like about working with me is I have been doing this for a while, and I have some assets, I have some security, I have capital that I will inject into a deal if I need to, and that's important. I think that if I'm not going back to them and saying, hey, we need 100 grand or 200 grand or 300 grand, I'll just finance it myself, and then we'll work it out when we do the takeout financing, and I think that goes a long way as well.
What level percentage of contingencies on top of your contingencies do you typically think would, at least for you, is like a secure percentage?
I think 10 to 15% used to be, pretty reasonable, but now I'm usually adding 20 to 25%, right? And just with the way that everything is, I think things are starting to regulate a little bit. We're seeing the cost of materials come down. We're seeing the labor shortages get taken care of. And actually the construction industry has slowed now. And so there's, those sub trades are a little more hungry. And so I think that's helping. But then, I think when people are running their pro formas and they're looking at interest rates, I mean, we have the stress test rate here in Canada, which is it's bank regulated that they have to run interest rates at, 5 or 6%. And if you're running your pro formas at 2%, which is where interest rates were when we started this little project, that's a big difference. So I tend to, keep interest rates higher, amortizations lower, loan to values lower. And if we come in above that, then that's great. That's good for our investors. But if we don't, then we at least have sort of planned for those rainy day situations.
So this project, you're expecting to hold it for 5 years?
That's the minimum. I don't really like to sell anything. I'm a buy and hold person for sure. And I have just seen what's happened in the Toronto market over the last couple decades. And I'm also, when you look at Toronto in relation to a lot of other major cities around the world, we are very undervalued here. When you look at our cost per square foot for real estate in comparison to, let's say, New York or Hong Kong or London or any of the other major cities, we're still a bargain. Canadian dollar is not so strong against the US dollar. So when you look at those factors, and then we have a massive housing shortage here, supply and demand is not in check. So looking at all of that, I'm a big believer in the Toronto real estate market and where the potential that it has to go. And so I'm always telling that to my investors. I'm like, look, let's not try to get in and get out. I've seen huge swings in value when we sit around that 5 or 6 year mark, and then we can reevaluate then and then see if we want to make any changes at that point.
So what's next for you, Darren?
Well, I'm actually we have 2 projects that are just breaking ground right now. The 31 unit building that we're doing. I have another 8 unit conversion that we're breaking ground on as well in City of Toronto. But my latest project is in Costa Rica, actually. And
Costa Rica.
Yeah, I have 2 projects there. One that we purchased about a year ago. And another one that I'm just closing on at the end of the month. But the idea there is to build about 10 homes on a lot that's about 5-minute walk to the beach, and sell as many of them as we need to sell to recoup our investor capital. So it's probably going to be selling maybe 6 or 7, and then keep the 3 or 4 remaining and rent them out, short-term rentals. And I spend my winters in Costa Rica too. So it's a bit of a lifestyle play for me, but it's also a great real estate investment play.
Oh, how's the real estate market over there in terms of like regulations and coming from Toronto into Costa Rica?
Well, I'll tell you one thing, there's no development charges, and which is nice. So I think from a North American perspective, investing in Costa Rica is nice. It's a stable government. There's very, very little, if any, corruption at all. So when I compare it to, unfortunately, a place like Mexico, I think Mexico is a decent investment too, but it's just a bit of a different experience. But yeah, the regulatory process in Costa Rica is relatively straightforward and simple. The challenge in Costa Rica becomes water. So you can't get a building permit without a water permit. And if you're going for a very aggressive development, the municipalities are often cautious on giving you the water to do that. So you have to have a plan in place on how you're going to provide water if you're going to be, going for a massive development. But we're not. We're staying within the realm of what's, they're looking for. And so water shouldn't be an issue for our developments.
Oh, well, and also what a great place to vacation.
Yeah. But last year I spent 3 months there, and it was, I couldn't have enjoyed it more. It was an amazing time for me.
Oh, that sounds beautiful.
Mm.
How has real estate investing impacted your life, Darren?
Well, on that note, I think that's where it really has impacted me. I feel like I can live anywhere now in the world, and I have the ability to do that. I can work from wherever, and that's been a big change for me. I think that just trying to find that balance of life and work, real estate affords me the ability to do that. And I think that's really important. It's been a big impact in that I'm in a situation where a lot of people that I worked with, a couple decades ago are not in that situation. So I feel very fortunate. I've worked really hard, but I think that's the one thing that I like about real estate is the ability that it just gives you the flexibility and freedom to, make your own schedule and run your own company and do all of that, which I absolutely love.
And if there was one thing that you knew now about real estate that you wish you knew when you first started, what would that be?
Go bigger sooner would be one of them for sure. I think that, we think in real estate that there's this natural progression where you have to like buy a single family dwelling and then you get to graduate to a duplex and then you get to graduate to a triplex and fourplex and so on and so forth. And that's not the way that it works. If you want to start with a multifamily building, a 100-unit building, you absolutely have the ability to do so. I wouldn't do that without some mentorship and some coaching and some education, but you don't have, there's no linear pattern. There's no progression in real estate that you have to start somewhere and go somewhere else. You can really do whatever you want.
So Darren, what separates the successful people in real estate?
I think the most successful people that I know, they treat real estate investing like a business. And I know that sounds sort of like silly and that like, yes, of course, everyone's treating it like a business, but I coach people all the time and, they don't necessarily, they still get emotional about certain things and they get tied into properties because, they like the look of it or they like the area or they're trying to think of it from a personal perspective. I'm like, you just have to treat this like a business and make decisions as if you were a business owner. And if the numbers don't make sense, you walk away. Or when you feel like you're overwhelmed, you hire an employee. Like all of those things that we would do in business, a lot of people don't do when they think about real estate investing. So I think that's what really separates the novice investor from the professional investor is, their ability to treat it like a business.
Oh, thank you, Darren.
Yeah, no problem.
So Darren, if our listeners also wanted to find out a little bit more about you or reach out, where's the best place that they can go?
Yeah, my website is probably the easiest, darrenvoros.com. It's pretty straightforward.
Awesome.
Or my YouTube channel, which I have a ton of videos on there about real estate investing. I apologize to my friends south of the border. Most of my content is geared towards Canadians because, in the US, you guys are so fortunate to have so much great content by, amazing US investors. But in Canada, we don't have a lot of that. So I think my YouTube channel last month hit the #1 YouTube channel in Canadian real estate. So I was super proud about that.
Oh, awesome. Yeah, definitely. What's the channel called?
It's just my name, Darren Voros. Yeah.
Awesome. Be sure to check that out, everyone.
For sure.
Awesome. Appreciate you coming on, Darren. I love this conversation and I'm so grateful to have met you today. So thank you so much.
Yeah, no, thanks for having me. And I really appreciate it.
And thank you for listening to our podcast today, brought to you by Bonavest Capital. We would really appreciate it if you can go to iTunes right now and leave a rating and written review. Also, please don't forget to subscribe so you can always get the latest episodes. You can also connect with us on Facebook, How Did They Do It Real Estate. We'd love to hear your feedback and any topics that you're interested in for future episodes. Lastly, to learn more about us, you can go to bonavestcapital.com and fill out the Contact Us page so you can speak to us directly. Nothing on the show should be considered as specific personal advice. Please consult your legal, tax, and real estate professionals for individualized advice.